Right, no, smack yourself in the head.
Joe's sitting here telling me to smack myself in the head. Wants me to wake the fuck up.
Let's go.
Hey, it's a cool day, buddy.
Yeah, I know. I was gonna put a jacket on. I was freezing.
Yeah, I wanted to, but I want to talk about something very important.
Oh, Shizzy made out on the Aptos thing.
What's that?
Shizzy got 2 of the Aptos airdrops. Good.
All right.
And got out at 12
bucks.
Good job, buddy.
$12.
Trade of the day.
Did he make $12 or did he get them out at $12 each?
No, they were kind of falling, and I think it got down to 7. So my guess is he got out early because I think they came out right around.
I'm asking, did he make $12 or did he sell them for 12 each?
Well, I think he made $12 when he sold them for 12 each. Like each share. He's talking about each token.
Sold at $12. Oh shit.
Yeah.
Well, that's a nice chunk of change. Yeah. That's awesome. That's awesome. 3,300, something like that.
Yeah. Good job, buddy.
Had some waffles this morning.
Yeah, I saw that tweet. I was trying to figure out what that was about.
This is what it's about. It's about the importance of stressing pure maple syrup, man. Everybody should not be eating anything but pure maple syrup. You don't need shit in your pancakes or your waffles or your French toast. You just need maple syrup. It's just a delivery mechanism. So I just want to reiterate that as a public service.
Yeah, I thought you were bringing up some kind of a furry thing or something like that. I wasn't sure.
The maple syrup does not work with furry.
Sure.
That would be
gets a little sticky.
It's already probably too sticky.
Yeah, there you go. That's gonna sink in there for a while.
Yeah. All right. Hey, got a new episode of Mission DeFi out. Our buddy Roy Blackstone.
All right.
His game Shadow War. We talked about why he thinks his game's going to succeed. And his kind of light touch of crypto in the game, but we also talked about chain binders. So let me quickly show a couple of clips from that. This is about chain binders. I harassed him before the show, Joe, about relaunching it as a separate protocol. And then during the show, he said he's been thinking about it, but he's not there yet.
CryptoPunks kind of, they hit a floor recently, and then you have a few projects here and there that are a lot more less stable, I would say, like Azuki and things like that. So like these projects do exist, but it's certainly like it's very rare to have a project that sort of maintains its value. And that was the idea behind chain binders, where it's like you don't need to find a seller, you don't need to find a market. You can just exit whenever you want.
Yeah, and now it's a game for us that hold, right? Because it's like, how long am I going to stay in, right? Am I going to be the last man standing? And how much is that going to be worth if it is? Because the pot of ETH will be significant at that point. So really cool concept. I love it. I think there's opportunities for fundraising for projects, for releasing collections and all kinds of other stuff. So I hope I'll keep bugging you about it because I can't get it out of my head. So I just wanted you guys to know that I was pushing that,
Good.
And here's
so if you like action games, you're gonna like this game. If you like strategy games, you're gonna like this game. If you like cyberpunk stories, you're gonna like this game. Even if you don't play it, you will interact with the story parts of it. If you like dramatic orchestral productions made by real musicians, you will like this game. If you like writing things yourself and making merchandise, you're gonna like this game. If you like crypto, you're gonna like this game. So
nice.
Yeah, we're basically mixing everything together. Again, if you like fantasy, you'll find fantasy characters in this cyberpunk universe. If you like cyberpunk, you'll find that too. So really, everyone does have sort of the one thing that they really like. Pretty much everyone I've shown it to. Yeah, no one's looked at it and said it sucks.
So the game sounds really cool. One of the really cool things he's doing with the game is he's Creative Commons licensing, releasing all of the art, all of the functionality, all of the stories, everything, so people can create whatever they want around the game and sell it and do whatever they want. So he's allowing people to do derivative creations no matter what. The story is about a rogue AI that is actually beneficial to society. It actually is working and going well, and it's about 5 massive corporations that kind of run the world with the AI that start infighting, and you're part of a team that's part of those battles of these corporations. So anyway, cool game. I love talking to Roy. Guy is brilliant. You know, he's built a lot, and you and I met him through Doki Doki, and had a good experience with getting to know him and watching what he builds. So he's going to spend a couple of years building this game, but he has hired away developers from all of the major gaming companies, Blizzard, I mean, AAA folks from all the big gaming companies. He's got 22 people on staff building this game. So there, in the interview, there's artwork and stuff from the game. So anyway, this is his first coming out for the game. So Do Kwon. so I'm not going to do all the clips I have loaded up. But the one that I found most interesting, and I tweeted out that his attorneys are probably screaming at YouTube or their podcast player, was his apology. His apology answer to her. So let's run that clip real quick.
Fat Man Terra posted some stories of people who had lost a lot of money in Terra. There was one man who said he had a malignant tumor and he'd received $50,000 from insurance for therapy, but then he lost 90% of it in Anchor. Someone else lost $250,000. A lot of these people had young children. Taiwan News reported that a man in Taiwan who had $2 million in Terra had that value plunged to about $1,000 and committed suicide. Here's your opportunity to say something to the people who lost what in many cases was their life savings. Here's your opportunity to say something to family who lost members to suicide. What do you want to say to them?
Oh. So whatever issues existed with Terra's design, its weakness to respond.
You know what? This is going to take too long.
Look, I can give you the response right away. I'm sorry.
Yeah.
That's
well,
it.
So here's the thing. He doesn't say I'm sorry for the first 2 to 3 minutes of her asking the question. And then she says, okay, but is there an apology in there? And he says, oh, yes, I'm sorry. But then this is where his attorneys freaked out. I guarantee it. He proceeded to detail all of the things he did wrong and all of the ways. So it was an actual apology, which was great to hear, but it's the last thing with what he's facing from a legal perspective. It is the last words that should have been coming out of his mouth, because it was, I mean, he basically created the case for everyone that wants to sue the shit out of him or prosecutors that want to come after him, because he basically, I don't know how Laura does it. She has this kind of monotone delivery, but she got him to apologize. And then she got him to like detail everything he did wrong. And so, you know, I have a feeling Doe's going to be having some issues.
Well, you know, my feeling on this, the guy who puts the Taiwanese chap who put in 2 million and watched it go to 1,000. I mean, when he goes and kills himself. I mean, that's not Do Kwon's fault. Okay. That guy would have found a protocol to get in. He was obviously chasing some high risk stuff and concentrated all his assets into one protocol.
Yep.
I mean, that's just ridiculous. So the answer to that is, I'm sorry for people's losses. I didn't anticipate it to go this way. Stop.
Yeah, no, he doesn't stop.
Yeah. I mean,
he doesn't even, and he doesn't say, I'm sorry for their losses. He says, I'm sorry, and then goes into why he was wrong, and just it's bad.
I'm sorry, it didn't work out the way I intended.
Yeah.
I'll make it up to you somehow.
She also asked him about his Twitter arrogance, and he basically said he was playing a character and he got carried away, blah, blah, blah. But anyway, interesting interview. I encourage everybody to watch it. So Shardeum, 18.2 million from some interesting VCs, by the way. Jane Street.
Yeah,
CoinGecko. Not VC, but Gaff Capital. My buddies at Gaff Capital, who also invested in Walken, are in Shardeum.
Oh, is that the UAE group?
Yeah, that's the UAE group, Gaff Capital.
Cool.
And they actually have an interview with one of their partners in Mission DeFi, but Reggie. But some really interesting investors, and for a layer one, a smallish round. Right now, it's a seed round, so you can maybe expect a $200 million round later, but an interesting seed round. And so I was, you tweeted about it, and then somebody responded to you. Was it the Shardeum account, or was it where was it?
Back and look, man. It's just so
Greg
much.
Hammer. Greg Hammer responded, and he is
the CEO, I believe,
head of ecosystem.
Yeah.
At Shardeum and Shardus Ledger. Is that a wallet?
Well,
framework to launch Landing Scalar. Oh,
he's in Texas, which I thought was kind of interesting. And of course, the rest of the team appears to be Indian based.
Yeah.
And that's what I like about this. We started talking about these, and we're talking about like Arbitrum and Aptos and ZK Sync, and Shardeum came up, and I just like Team India right now, because it just has a built-in community of 1.4 billion people that will go to an Indian play first. Yep. And so to me, I think with all the Polygon people involved, and I think some Define people and a few others, to me, this kind of fits into like they're building like a little Keiretsu kind of ecosystem there. It's like a real world layer one, or app specific, geo-fence thing. So I like it for that. And then I saw this raise, and I'm like, man, these guys have got something going on. So I don't think the mainnet or testnet launches until, I think the mainnet's first quarter next year. So you got plenty of time to go in there. You get some testnet tokens and play with these protocols. Because that's what you want to do, because you want to be like Shizzy. And you want to be just for doing nothing. You have to work it, but you want to be able to get something for it.
There was something interesting here, and I didn't get a chance to go into it, but there was, where the fuck is it? Well, it's down here, but I was hoping there was a link to it. Low hardware requirements to operate a validator node. Kept low by offloading historical data to archive nodes and adding more nodes to reduce the load on each validator. So they're auto-archiving previous data in the chain that would normally take up gigabytes and gigabytes and gigabytes of storage on your computer, on your node that you're operating. So evidently they're making it pretty easy to set up a node and to secure the network and earn tokens. So I think there's a lot of potential opportunities in this one. And, look, they're hitting, it's EVM layer one. So you've got the compatibility thing, and people can move their projects over. Linear scalability and low gas for every node that joins the Shardeum network immediately increases the transactions per second. So the more nodes they have, which is why they kept the qualifiers low, the more nodes they have, the faster the network gets, right? So you're incentivized to build a node, and more nodes and more nodes and more nodes, because you're going to make more money, and the network that you're supporting will actually get faster and faster, and the capacity will increase. So it's actually a really smart model. I can't remember what other chains have kind of built that way. I almost want to say Solana has some of that capability. Immediate finality and low latency. Solid security. It says a proof of quorum consensus algorithm. Not quite sure what that is, but I'm assuming it has related to the number of nodes that are securing a transaction. High fairness and energy efficiency. Transactions come on a first come, first served basis. So I assume they're eliminating MEV. Anyway, this looks like a good play. It's going to be really interesting to see how it does. And then they give some use cases. Not a ton of detail here on like setting up a node or anything. I don't even know. Are they on testnet yet? Is this thing even?
Yeah, I've been in there, but
testnet.
I don't. Unless it's changed in the last 24 hours, you can't really do the swaps yet. But
right. I mean, it's not live. It's not live though, right? On mainnet.
Well, you can
test.
No, not mainnet. No, that's at least Q1 23.
All right. And here's the instructions on how to run a node.
See, what I like about the node strategy is that, one, think about the market they're in. And, people don't have a lot of money to throw around in the nodes. Okay?
Yeah.
They're super high priced. So you require, 10 million tokens to be a validator or something. So this really decentralizes that out into the grassroots population, which is what we're all about.
Yep.
So that's a thing I like here too.
Yeah.
As you pointed out, it's so, it's one to keep looking at and stay on top of. I mean, I got some testnet tokens already, SHM, and I've been playing in there. I mean, it's just another growing community. So take a look, guys.
Real quick, catch up on some comments from the community. Niblet says, do something, Do Kwon. No, wait, stop doing stuff. Eamon says, shard us your wallet. Shizzy says, India is doing big things. Eamon says, I just can't get past the sharding as a solution naming. Sorry, little toilet humor.
Yeah, it's an English language joke.
And Niblet says, my inner 9-year-old will never not find that funny. Yeah, I got to agree. It's pretty funny because if for folks that don't know what a shard is, Joe's going to tell you.
No, I'm not going to go that far.
But
anyway, you can figure it out.
This looks like a powerful option. I actually like. I don't see any big name VCs in that raise. Let me see, where was it? Well, couple.
The Shardeum raise?
Yeah, a couple of big names.
Well, you got the Asian funders are all in this, and they swing smaller amounts and they spread it around.
I like Balaji being in it. I like the mix. We need to see the tokenomics and see what the vesting schedules are like. But this is really interesting to me. So I want to take a deeper dive.
Yeah, you should. It's it looks really promising.
Yeah, definitely. And in the documentation, it tells you how to set up and run a node. Well, it says it does. I don't see that they actually give instructions for it. So we'll have to ask them to get those up so people can start getting set up on
I'll message him and see if we can get him on the show, get these guys on the show.
Great. Yeah, let's do it.
That way they can tell us everything faster than us figuring it out.
Yeah. So I did this interview with Amplify DAO, the referral affiliate program people.
Yeah,
we talked about this last. Yeah, we talked about this last week. Well, this is pretty fucking amazing. So this tweet, right? This tweet was up. It had the normal interaction. I get 15, 20 here, a couple thousand engagements, whatever. And it was just kind of, it's my normal show tweet, right? Well, they integrated yesterday, or no, two or 3 days ago, they integrated and launched in their platform the ability to have people come into Discord, pick Twitter tasks that they want, connect their Twitter account to the Amplified Twitter account and to their Amplified Discord, and they post up tasks for a client or for themselves in this case, because they're doing publicity for the protocol right now, and people are earning their token for tweeting or liking or retweeting. And so this tweet now has 134 retweets and 149 likes. Most of that is from expressly people in the community that have joined their Discord actually going out and committing the tasks. This is a really cool, seamless system. Like, if there's any one first thing that a referral program can be, and have rewards built into it with airdrops, et cetera, like this, getting protocols out promoting on Twitter is absolutely fantastic. So now they have referral, affiliate, and Twitter tasks for people to go out and promote and make it work. Eamon says, Brad, I can see why you don't like Discord. You've got it on light mode instead of dark mode. No, dude. Dark mode is bad for your eyes. I don't know how many times I have to tell people that.
No, it's the other way, dude.
No, your eyes don't work that way. Your eyes work dark on light, not light on dark. The light is bad. The light is bad.
Yeah, Brad.
So,
Mr. Scientist.
No, it's actually true.
Really?
Yeah.
I'm sure you could find about 50 million people that would say the opposite.
Well, they may say the opposite, but we can talk medical science if you like.
Yeah. I guess you could.
So Scott Lewis, one of the founders of Canto and some other cool projects, tweeted this morning, and I did some a little more deep diving into this, but he said FTX is spending money to push a law through Congress that may force DeFi protocols to operate like centralized exchanges. The proposal is called the Digital Commodities Consumer Protection Act. A better name would be the Digital Commodities FTX Protection Act. And I wrote, not surprising, they have a fiduciary responsibility to shareholders to advance profits, not DeFi. But anyone using a centralized exchange should expect that a percentage of their fees will go to advancing centralization around their legal framework for which they already comply. Don't use a SEX if you don't want to promote, deeper, tighter regulation of DeFi, which is exactly what FTX is going for. Now, Alameda has a ton of DeFi investments, but at the end of the day, they don't give a shit because they've already spent all the money getting the licensing and the regulations dealt with and everything else. So I dove a little deeper into the legislation, and it's exactly what Scott said. Essentially, it's redefining existing CFTC related regulatory laws, and it's basically forcing anyone operating any kind of exchange that trades at least Bitcoin and Ethereum or anything else that's get labeled a commodity to go through all of the money transmittal, the licensing, be registered. You must have full brokers on staff. You must have everything on staff. So that means any DEX, anybody doing anything related to any of the commodities, Ethereum, Bitcoin, or whatever else gets classified by the CFTC as a commodity, will now have to go through all of the hundreds of thousands and millions of dollars of regulatory licensing that FTX already did. And FTX is in a position to not give a fuck, right? Because then they see themselves, this is what I assume, they haven't said this, but I've read through their policy. They have a policy site where their lobbyists post, and it's in their best interest, right? Now FTX can become the licensed gateway for DeFi protocols, right? So they are advancing heavy-handed regulation on DeFi in order to benefit them. Not surprising. That's their job. They're supposed to benefit their shareholders. But if you're spending money and paying gas fees at FTX, you're helping this happen. And that's just the bottom line, because a percentage of your money is going to their lobbying group. So keep it in mind. Any comments, Joe?
Not really. I mean, shooter's got to shoot, right?
Shooter's got to shoot. Okay. Sure.
I mean, that's what he's going to do.
Yeah.
I mean, do you guys think all these crypto guys are really Mr. Pro decentralization and everything like that?
No, but surprisingly, the one I expected to be the worst offender, Coinbase, is not. Coinbase's lobbying group is actually out lobbying for DeFi to be more hands-off. Their policy statements, I read through their long policy document that I think they released in March or April, which was incredibly encouraging. Coinbase is operating from the perspective of, I think, that they are planning to be a part of DeFi, but they don't want to be the gateway to DeFi. They want to be able to build products and leverage DeFi for their customers. So I was really encouraged by Coinbase taking that stance. It's actually a little bit surprising to me, and they may get flack from shareholders for doing it, but FTX is taking the completely opposite route. So
yeah, I don't know. I mean, look, you want to take the competition off the board, of course,
right?
But I'm surprised that they're being the more aggressive player than Coinbase. I would expect it. If I was Coinbase, I would want the DeFi ones all regulated to drive them into Coinbase.
Yeah.
But FTX, it seems kind of like not like that's their best move. They're better off not committing, because if you let someone else do it, Coinbase, then you would benefit from it. If you
right.
So popping your head up like this might be a mistake.
Yeah. And look, I mean, I think the people who trade on the people who spend most of their time trading on a centralized exchange probably haven't taken a deep look at DeFi, and probably aren't kind of DeFi or crypto or decentralization oriented, right? They're not, that's not their thing. Their thing is speculative trading. And I'm not deriding anyone for doing that. That's a way that people make money and they like doing it. And so I get it. And that's hard to do a lot of strategies on DeFi right now. So I understand that. And it's like you say, it's kind of strange that they're taking the lead on this, but they are taking the lead on this. And, the thing that gives them more power is not only do they have an entire lobbying group assigned to this, but, Sam has donated millions and millions of dollars to Democrats in Congress and has funded a lot of folks there. So he has friends now in Congress. This is also a bill that's supported by, a bipartisan group of those senators who are very Bitcoin oriented, right? So it makes it, I think this is a real threat to DeFi in general, but it's also a huge threat to anybody in the United States that wants to build something DeFi, because you're going to have to go through, a huge amount of licensing and regulatory approval to be compliant. So.
Yeah, look, I mean, this is what my lawyers in New York have been saying for 2 years, that you don't want to get near the hammer's coming down and you do not want to be starting protocols up if you're an American.
Right.
Because, if you're young, you don't give a shit, you can go be a barista or sit on a tropical beach for a couple of years and ride things out. But, yeah, I can't do that. So, because it's just not worth it. So I think that you have to go to a jurisdiction where you can, if you want to do it, or you have to not be American when doing it. So that hurts us. But, it's not like this wasn't expected in my mind. I found he played a really smart strategy when he co-opted everybody. And now he's on the same side with the regulators, so to speak. I mean, it could be smart regulation, don't get me wrong. But that doesn't, those words are almost kind of oxymoronic. It doesn't really always come out the way you intend.
But you're right. It could have been smart as it relates to encouraging people to innovate in the space and keep it in the US. That's what could have been smart about it. Right. And this doesn't do that. And look, I mean, Sam doesn't care because he'll fund people all over the world. So he doesn't give a shit. He doesn't even live in this country anymore. So, I get it. I understand the motivation, and I understand that you owe your shareholders. You don't know anybody else. You don't know DeFi or the spirit of DeFi or anybody else. So I get it. Eamon said, back to the eyes thing. It depends on whether you have other vision issues, read lots of text, or how much time you spend in a bright or dark environment, light versus dark. Niblet says, speaking of Coinbase, Google has partnered with Coinbase to take crypto payments. Yeah, I saw that the other day. I think it's for their cloud services, if I'm not mistaken. So, and on regulatory, just in, German prosecutors have searched the headquarters of Deutsche Bank in connection with an ongoing investigation of the multi-billion euro tax fraud scheme known as Cum-Ex. And Bantech wrote, prosecutors are dripping with excitement.
I didn't get that when I saw the thing first until I saw the little quotation word phrase.
But but here's the bottom. I mean, Deutsche Bank is so fucking corrupt. I mean, they have been busted so many times. And that's saying a lot compared to all of the other banks who are just as guilty as but Deutsche Bank seems really bad at getting caught, or really good at getting caught.
There's all those schemes that come out of Europe that are like this type of scheme. And, they're usually originating some type of security that then gets at a discount that then gets sold in New York at full price. So there's all these weird ones that happen. This one in particular, I looked at it a little bit, and, it just looks like flat out, just a lot of exposure there for everybody. Because if I'm not mistaken, they're like handing out stuff at I know GE used to do this in a day's fast with earnings report. So you tell Wall Street, we're going to make 20 cents this quarter. Well, what you do is then you get all your earnings. And if your earnings are like 45 cents, you don't report 45 cents. You report 22 cents, a little bit over. And you keep the rest back there. So next quarter, when you F up and you got to get some credit into your earnings to meet the expectation number on the street, you've got that pad there to bring in.
Right.
That kind of stuff happens. But this is about manipulating around on taxes and paying to the German government taxes. So that is something that Germans are pretty, self-monitoring, law-abiding people. I've got tons of stories about when I used to work there when, you'd be on like a Hofstrasse or a People's Walk where there's no cars and there's still a crosswalk sign still from the olden days. And Germans will stop and wait for it to change. There's no cars on the street. There's people walking, but they'll wait for it. And so to me, you not paying your fair share is, it's going to be regarded as unpatriotic.
Yeah. Yeah. Well, they said they're investigating 1,500 folks. So, but
if I was everybody in the mailroom, I'd be running for cover about now. Because somebody's going to be the sacrificial lamb here.
Well, yeah, exactly. And that it won't be the senior executives. That's for fucking sure. Niblet said my inner 13-year-old would never not find that funny. The comics joke. That's good. But here's what I think it points out, right? This whole idea that, that DeFi is somehow more corrupt or more scammy than the banks is just ridiculous. And,
well, let's say crypto. Let's not say DeFi. Crypto.
Okay, crypto. And this idea that regulations stop people from cheating, screwing people over, breaking the law. It doesn't happen. It doesn't work that way. I mean, I'm sure there are some people that don't because of the laws, but when you're big, there are no laws. You get investigated, you throw out a lamb, and then you pay a fine, and that's it.
Yeah, my thinking though is that I don't think that people are sitting there at the boardroom or at the top of, CXOs at Deutsche Bank scheming up all these things. I think there's a culture there that basically says to everybody, go make friggin' bank.
Right.
And people cut corners and, do things that people trying to make bank do.
Yep.
And then it bubbles up, too much banks being made, somebody notices, and then it's like, holy shit, I can't believe this was going on here. And then people get fired, but there's usually big old severance packages attached to it because it did bring the bank profits.
Yeah.
So, it's always good. It's in crypto. It's in friggin' dry cleaner stores. It's in paperboy routes. It's in banks. It's everywhere. Corruption is everywhere. Yeah, and you have to self-police your own behavior. So you can't blame crypto for this shit.
No. And look, at the end of the day, it's all about incentives. We talk about this all the time.
Yeah.
Like the incentive is make more money at whatever it takes, right? And this is a cultural thing that's existed in a lot of banks for a long time. It's like you said, Joe, it's like, go make the money, right? And so they do whatever it takes because they know they'll lose their job or they won't get that Christmas bonus if they don't go make the money. And so they're like, fuck it, I'll cut these corners. Yeah.
And there's a lot of wink, wink, nod, nodding going on because, when the young people come into these and they're bubbling up in the organization, they're kind of then inheriting the network of their boss or the company. And as you're moving up and you're making more and more money, all of a sudden you start coming across all these little schemes and you're like, oh, okay. And so you just act like you don't see it, basically.
Yeah.
And oh yeah, whatever. Oh, I mean, that was tied to my $400,000 bonus check.
Who knew? Who knew?
By the way, I gave 10% of that to charity.
Exactly.
And, so it's, you have to always, when you start crossing those lines, you just got to really be careful. Yeah. And if you're going to cross it, make sure it's worth it because it could end all. Just go ask the Tesla Nikola truck guy who's staring down 80 years.
Yeah, exactly.
For basically, I don't want to say minor shit, but lying in a prospectus, okay, on a money raise.
Right.
And so to me, if you get caught in this, in the TradeFi space, unless, you can lawyer up and stuff, you get big convictions. I mean, look, think of that like the Nikola truck guy and then think of Do Kwon. And then you're kind of like, core apples, oranges, all that. But, he's not staring down 80 years.
Yeah.
Even if he comes in from the cold, because he didn't lie in a formal prospectus on a formal security to his investors. He just fucked up, man, and looted the till. It sounds like a little bit, but that's not my call to make. But it's just kind of the penalties are there, and I'm just surprised that this kind of stuff really goes on this much. It does, but I wouldn't. Do it.
Tilak, welcome. Tilak R. Mohanta has asked, how secure is DeFi? Tilak, it says secure as you make it. Because at the end of the day, it's about, first off, how you hold and handle the crypto that you have. whether you hold it yourself in a wallet or you hold it on a centralized exchange, which you can't do for DeFi, obviously. And then secondarily, it's screening and making sure that the protocols that you're interacting with have done everything they can, from audits to hiring the best developers to having methodology and algorithms that, you know, make them stronger. So if you're new to the space, I would recommend you taking a look at more established protocols that have been tested, more secure and safe protocols. None are completely safe. There's always a risk of hacking and exploits. But, you know, Compound, Aave, those kinds of folks are folks I'd be looking at if I was new. Yeah. Japan is going to further relax crypto rules by easing the listing of tokens. This headline is a little bit deceptive, but the body that governs crypto exchanges plans to allow them to list coins without going through its lengthy screening process, unless the tokens are new to Japan's market. So it sounds like they're grandfathering in any tokens that have been listed on these exchanges and were available to Japanese citizens prior. But after that, anything new coming in, you know, some new token that launched today would have to go in and go through the screening process. So obviously the Japanese government is trying to, you know, well, as it says in the headline subhead, Japan seeks to revitalize its crypto sector. You know, they have been known to be rather relentless in their pursuit of crypto founders. So it'll be interesting to see if this goes through to people that are involved in building in the crypto space in Japan. We'll see. Just you know, listings on an exchange does not mean that their crypto industry will thrive. It does mean that more trades may happen, and it does mean that more fees will happen, and that could mean more taxes coming in. So I'm assuming that's kind of what they're going for. I don't know.
Look, it makes sense. I mean, technology-driven society. I mean, I was always surprised that they weren't at the forefront of it.
Exactly.
But very, very conservative society.
Yes.
Too. So, you know, I don't want to say past structure.
They still pixelate their porn. So.
Yeah, but but more of that. Everybody is, you know, the society is very self-organized. Everybody kind of knows where they're supposed to be. You don't get that kind of cowboy ass shit that you get in, say, America or places like that, where you can play above your station, so to speak. You know, they order that in harmony, and plus they're also looking at previous generations and forward generations and all their planning. So it's a really interesting culture. It got exposed to it, you know, through the Doki Doki stuff, of course, you know, and the NFTs and, you know, everything going on. So I like this. I would look a couple of years. I think you'll see them up in the top 5.
That'd be great.
Switzerland, Singapore, and you know, Germany, UK, groups like that.
I'd love to see it. I remember when the founders of Doki Doki were, and they're anonymous, but we're trying really hard to try to work within the Japanese government and become compliant with a company and the whole bit. And it was a nightmare. First of all, their first attorneys turned on them and went to regulators with information about them. And then it just got to be a really terrifying thing for the team. And so they bailed on it, right?
Yeah.
Not the project, but they bailed on trying to fit into the Japanese business regulatory structure, which is disappointing when a project's trying to do the right thing and has something that's cool and isn't exploitive or harmful. And, you know, that's an example of regulatory influence, regulatory power actually forcing someone to not do the right thing. Not forcing, that's a strong word, but preventing them from doing the right thing, which is to become as compliant as possible and make sure that protections are built in. So,
you know,
as
you said about their lawyer, you know, it's also important. It reminds me of something that, you know, attorney-client privilege in, like, say, the U.S. and, you know, Britain and, you know, those types of, I guess that are based on British common law type setups, don't have the same obligations to the client. I think in Japan in particular that they're supposed to share anything they hear that's negative with the, you know, judges or whatever. So it's not the same. You can't go in and go, oh, fuck, I was hammered and ran over that whatever.
You can't tell your attorney the truth.
Yeah, you got to, like, lie to the attorneys. So, you know, number one rule is don't end up in jail in Japan. Because if you're going to court in Japan, you're already guilty. I mean, it's 99% conviction rate.
Damn.
So you don't, nothing, you know, not throwing arrow rocks or pointing fingers at people. It's just it's their culture, and you got to understand that in any country you do business in, it's not always going to be like your own.
Absolutely, absolutely. Let me see what else we had, Joe. Oh, hey, I meant to climb into this one, but check out Milk Road Daily. Evidently, it's a property based NFT property based sales system, and they already did a sale of a house via NFT for $175,000 last weekend. So holding the NFT gives you ownership of the house. A lot of questions come up, like, what happens if the wallet's hacked, et cetera, et cetera, et cetera. But
how about this one? Is it a security?
Well, is a house a security? I don't know.
I think if you can package up mortgages and stuff and bundle them and sell them, then I think, securitize it, then I'm going to say somebody's going to make that argument. Yeah,
I would agree with that. But I think just buying a house, from an NFT marketplace. Eamon said Roofstock did it. Yeah, it's Roofstock, a leading marketplace for buying and selling turnkey single-family rental investment properties. Oh, very interesting. So their focus is on selling properties that are rental investments. That's cool. That's very cool.
I think it's a pretty cool idea too. I wonder, look, we always want the ability to take that NFT now and go to Aave or somewhere and borrow on it, and then go be able to play and do whatever you got to do with that capital. That's what I want to see this get to. And I don't know if they're doing anything like that.
Eamon says they spin up an LLC for each house and hold that NFT in the LLC's wallet. So you're basically, I guess, buying out the LLC, and then you own the NFT. So you own the house. And I'm assuming then all the title, insurance, and everything else is done through the LLC. That makes sense. That's cool.
And I guess these are not, they don't have mortgages on them because the primary lien recorded on the NFT.
I would assume that, you have to.
Might be a cash buys.
Yeah.
These might be cash buys. Yeah.
I don't know.
No, hey, great. I'm glad to see it. Look, this unlocks.
Cool.
What is it? $30 trillion asset category in the U.S. Resi.
And what I want to fucking get to is where in South Carolina is a 2.5, 3-bedroom, 1,500 square foot home only $175,000?
Yeah, it's a lot of. Carolinas. There's a lot of bargains out there.
Fuck.
But a lot of it. I don't know about that type of house, but I was driving around up southern North Carolina, up through Sanford and Southern Pines, up to Chapel Hill a few months ago, and I was amazed that you had 30 acre lots with houses on them for $225.
This is in Columbia, South Carolina.
Yeah, that's the capital, I think. So, and that's what the University of South Carolina is. I have friends that live there. That's a real, it's like a little mini Charlotte, a little mini Atlanta. It's, like a Raleigh type place.
Yeah.
So cost of living's low, and it's a nice little town. Columbia is kind of like, Savannah, Charleston, those types of places.
Niblet says the LLC wrapper is also a way to avoid some land title transfer taxes where applicable. Oh, that makes sense. That makes a lot of sense. That's interesting. Huh. Well, this is cool. Look, and what I love is that people are getting creative about the model, right? They're trying to figure out the best way to do it. Ronora, by the way, said earlier, crypto earned through labor is unassailable. We should move away from pure finance into real production. Yeah, I think we're going to see more and more of crypto involved in actual production environments. But at the end of the day, production companies and manufacturing companies and product and services companies don't come about without financing. And so you've got to have the financial models behind them at some point to be able to fund them. So, yeah,
because that's what makes the crypto have the value.
Exactly.
For the labor markets.
That's right.
But yeah, look, this is what I think the whole key is here. If you're in the US, the Philippines, or, Zanzibar, you could basically fire up nodes and do things like this off your phone and other devices that start generating some cash flow or some value flow. Yeah. When you decide to sell it or not is up to you. And of course, the risk is that it can always go to zero. So I love this concept of putting money into, again, microfinance.
Yeah.
You don't need $50 billion in Zanzibar,
exactly,
to feed your family. You don't, it's like a tiny bit makes a huge impact. And that leverage is so key to elevating half the world's population to a sustainable value proposition, I guess.
Huh. Yeah. There was financing on this. Teller Finance. Is Teller a DeFi protocol? I think it is.
There is TELLOR.
No, that's the guys I interviewed
Yeah,
last week.
that's the only one I know.
Lending for fintechs. Oh, look at this. It is crypto based. So not only was it an NFT that was sold to buy the house, but there was actually financing via a finance partner. Now, I'm sure this was a bit of a publicity stunt, right? But it draws attention. We're talking about it. So I love it. Whoever's running
marketing, it's good to see it, because the last thing we saw in the US that I recall was the one in Tampa, which was like that ranch going for like 800,000. Yeah. And it was one buyer and nobody knew who it was.
Exactly.
So you're like, really? Sounds like self-healing.
This is the way that you can start seeing a path to scaling, right?
Yeah.
This is like, okay, we're trying this. We're going to see how it works. We're going to see what problems we encounter. But if they're all new, somebody was asking earlier about what if there was a title issue in the old house, blah, 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 blah. But if you do only new construction for this for now, then you can learn the lessons, gradually, and you don't fuck it all up at the beginning. So I think there's a real opportunity. This is really powerful. I want to take a look at Roofstock a little bit more.
Because look, now you could go and you can do a second mortgage on it for home improvement, and you can fractionalize it. It sounds
yeah.
So you could go out to the community and put it up on OpenSea and something like that equivalent. Be like selling 20%.
That's
stake.
Beautiful. That's beautiful.
And securing it with whatever the spread is between the first lien and the equity of the house.
I love that.
This is the kind of stuff that's going to just put DeFi on, steroids.
And now, do you build a marketplace around that? Like, so think about this. When Ronora was talking about real world production. So here's the deal. You want to improve the house to improve its value, right? So there's a marketplace, a DeFi based marketplace of contractors, architects, etc., that will design out the work, get it set up, and then in that marketplace, you can sell that fractionalized portion of your home for 20%. And then somebody owns that piece of the home in an NFT. Then they get the return on this when it gets sold eventually. That's got some real potential.
Even think about this, Brad. So how when you're walking around and, like it's in the Grove, they got, anywhere you go to a town where people come to retire, I guess, or vacation, you got these real estate offices. They got to pick all the little papers up in the window. Well, what if you walked up to the window and you saw this listing, say, and it had a QR code, and you would scan it with your phone, and boom, you're instantly into OpenSea, let's say, and you were making putting in a bid for the property or something, or you were buying a chunk of a rental property, where okay, I want to take 10% of that slice because I think rents are going up in Manhattan for the next year or so. And you're doing it all on your phone, and you're doing it right there. I mean, look, real estate, it doesn't like cycle fast. It's like slow as anything. And if we get it up to crypto speed,
that'd be awesome.
$30 trillion turns to $100 trillion real quick.
And that idea that you just have, somebody sets up, this company, Roofstock, sets up, maybe they do this already. Maybe this is how Roofstock works. But what if they provide property management, right? So now you could own this with 20 other people, and you get your monthly cut of the rent that's coming in, the profit coming back in, and you don't do anything but go in and buy a fraction of an NFT. I mean, there's no investment group to set up. There's nothing. You're just picking the ones you like. You're one of 20 people that bought a piece of it, or 50 or 100 people or whatever. You build a nice portfolio up of all these rental properties, and a company's taking their cut for managing it and building it.
So look, when you think about like Dennis or Max Life's ideas around real estate, this is a cool way to get it done. Let's think about Airbnb type stuff too.
Oh yeah, absolutely.
Where you acquire a portfolio of 20 Airbnb properties that are renting, and you've got like return numbers on each property on the NFT. You've got basically, what it costs to buy a slice of it, and people can come in and now all of a sudden go, oh yeah, these guys must be doing something right. They got whatever high occupancy, and the ROI or ROE on the property is, 14% or something. I want to get a slice of that one. And so now all of a sudden you can basically fractionalize pools of real estate to different investors that come in based upon how you manage that property.
Oh, that's good.
So this is kind of ties to a lot of cool stuff.
Application. You had a great idea. Now you have a marketplace not only of rental properties and Airbnb properties and whatever else properties, commercial properties. Now I, as an investor, could go in and buy, you know, several pieces together and have an index that I built myself of all these different kinds of properties. And I could turn around and sell that as one whole thing, an NFT that contains all of them, or sell off pieces of them when I want to. You could be a borrowing market against it. So you can go in and buy more, right? And that's based on the value. So, you know, it's just like anything else that you're borrowing against. There's all kinds of potential. Here's the other thing. You want to get involved in real estate, but you don't have $175,000.
Yeah.
You got $1,000, right? So you go in and buy the first piece of house, and then you take the savings from that, or you borrow against it and buy the next piece of a house. I'm getting really, I'm getting hot and bothered. Let's go back to that COMEX story.
Yeah, no, look, because also you can then go back to Teller, the finance groups, and you can pledge your NFT of your house to say Teller and get maybe, you know, 4 or 5%, you know, whatever below the mortgage rate. And then they're relending that out to finance mortgages. But importantly, 2005, I was working with some guys, the realestate.com original team, and about doing this with office buildings. But this is before crypto. So we were talking about, you know, fractionalized stock shares or something like that. But it was all about that whole point of, you know, the Chrysler building in New York, let's say. You know, I don't know what it's worth. Let's just say it's worth $1 billion. You know, you can't get in those deals. I can't get in those deals. You know, it's like you got to be swinging huge amounts of money and know the people.
Right.
But what if they laid off like 20% of the Chrysler building into an NFT and allowed people to come in and buy shares of, you know, whatever the return is on the building? You know, then you can come in with $5 and buy a piece of the Chrysler building. I mean, that's what I see with crypto and everything, and this decentralization of capital. This is the one of the key sectors that has to be unlocked.
Yeah, this is brilliant, man.
So
I'm really getting hot and bothered. Eamon says, giving away my idea for what I want to do with one of my properties. But Niblets says this, and this is, I'm so glad you asked this question. I'll tell you, Niblets, it's called the blockchain. No, I'm sorry. I don't mean to be, I don't want to sound
facetious.
Niblets says, how do you avoid this becoming like 2008 CDOs? Well, here's the cool thing. Everything will know where the market stands, right? We'll know that it's not fake paper or fake debt. Now, there could be financing organizations that just want to fucking take the money, but we'll be able to see that. We'll have all the data. We'll have all the numbers, right? Whereas with CDOs, we didn't know everything that was going on behind the scenes. We didn't have the details of how leveraged everything fucking was. And we didn't have and we probably won't have a single point of failure. The single point of failure, well, I shouldn't say single point of failure, but all it took was 1 or 2 banks to fuck it up and die that caused the cascade, right? Yeah. Whereas in this case, it's a risk, but I think it's a less of a risk.
Yeah, I mean, the key, having looked at that crisis a lot, the key thing I saw there was that when they were bundling, aside from the fact that everybody was getting mortgages who really shouldn't be qualifying for them, and I'm not saying that in a negative way. I'm just saying in that
they weren't qualified.
Yeah,
absolutely not, dude. Those mortgages were a joke. In Miami.
Yeah. So what happened though is that, look, you know, you would bundle up when you securitize mortgages. You're trying to do a blend of A paper with some subprime paper. So the typical one would be like 90% A+ paper. That's the highest, you know, most credit qualified people. And subprime is like, you know, regular people, but just not people with a lot of, you know, big paycheck type jobs. And then of course, a lot of people that are reaching or stretching. Well, it was S&P or Moody's. I think Moody's, one of those guys, somebody came up with the idea of like, hey, let's take these A paper rated securities, let's strip out the 10% that's subprime, and let's make 10 of those strips into one security. So all subprime, but we could still call it A paper. So then, you know, you look at Moody's, S&P, that's where this happened. So then now it's open season for the banks to sell the shittiest stuff for the highest price. So they securitize and bundle, and you know, no blockchain, of course, so nobody can find paperwork on any of these loans. A whole bunch of it ended up in Iceland somehow via London. So there was always somebody that got suckered to take the big weight of it. So in this case, I see NFTs on blockchain. When you're bundling or securitizing them, you're going to have transparency into the rating on each of the underlying mortgages.
Yep.
And how they qualified. So I think it's less likely to happen But at the same time, yeah,
Still
when
possible.
stuff starts going fast, we got to
Yes.
start paying attention.
Still possible, but if you're smart, right? If you're building these platforms that are facilitating this shit, you build in a mechanism from the beginning for tracking it. Because look, at the end of the day, just like the banks, it wasn't in their best interest for the whole thing to fucking collapse ultimately, right? They were short-term thinking. Well, the same is going to be true for these platforms. They want long-term, high revenue, token valuation high. And so if you're smart, you sell yourself as the anti 2008, right?
Yeah.
We're the platform that actually builds in the safety checks, monitors where the debt is, monitors the ratings on this debt, et cetera, et cetera, et cetera, so that everyone knows what's going on at all times. Like, make it all about the transparency, build it and become the biggest, because then the people investing are going to feel a fuck of a lot safer buying securitized mortgages, buying houses, buying whatever, because they'll know that we're not on the edge. Right.
Yeah.
And I think that's the
And
value
watch
of it.
all the LTV percentages and watch the down payment requirements. I
Exactly.
mean, I think those are still 30%.
Yeah.
You know, in the height of 2008, you could just go out and buy condos for nothing down.
Fuck, dude, if you were a barista at Starbucks, you could claim you had a side business, buy a $800,000 house, and tell them, the realtor would go, so you make 1.5 million a year, right? Right. That's it. I mean, that's how that is not an exaggeration.
Yeah.
These mortgages in Miami, I know in Miami, because I saw it, were being done that way. It was wink, wink, sign here.
No, I mean, I did a couple of them. Yeah, I did a couple of them. I know. You walk in and it's like interest-only loans. They just want to see like bank account balances and stuff like that.
Yeah.
There was no proof of any income.
Yeah.
It was just like, oh, this guy could cover the payments for a year.
Can your mother-in-law deposit 50 grand in there for a day or two? Yeah, great. Okay.
Yeah. The other forbidden thing. Yeah. You know, typically you got to start moving money into accounts like 2 months beforehand.
Nah, not then.
Not then. It was like the same day.
Yeah. Yeah.
But, you know, that was just the market demand and everybody was selling it. So, you know, I mean, in this situation, I think you can put the guardrails up that will prevent it from happening. But, you know.
Ronora said decades ago you could self-report an income to a bank and get a loan. Ronora, yeah, well, 2008, you could self-report your income to a bank and get a loan. It was true, man. So true.
Because what do the mortgage brokers do? Yeah. How do they get paid? By getting you a mortgage.
Exactly.
So you think they're going to go in and talk about your warts and all? No.
Yeah. Hey, I didn't see this. Pancake Swap launched on Ethereum.
We talked
a few months ago about the fact that they were going to go cross-chain, but I didn't know it had happened. Well, it happened. So they announced it in July, and they're deploying on Ethereum. And now they're saying they have some big announcement about the next chain or the next multi-chain strategy. But, you know, this is pretty interesting because Pancake Swap can drive a shit ton of retail users onto other chains.
Yeah.
I mean, they have the largest population of small retail traders of anything on the market. Nobody gets close to it. So this has some serious potential. You know, look, I mean, look what they said here on Polygon. Quick Swap is 10 million. Avalanche generated 5 million in the past 24 hours. Uniswap 206 million. But Pancake Swap, where was Pancake Swap's number for the last 24 hours? Shit, I thought he had it in here. Fuck, it's bigger. So yeah. So the bottom line is, frankly, if I were Pancake Swap, I'd be coming in asking for shit. Not at Ethereum, you can't do that, but Avalanche, Phantom, Polygon, please show me some money.
Anyway, yeah, no, I like this a lot. I mean, to me, you know, of course, everybody knows I have Cake in my top 10 picks, just because I love the retail penetration in like the third emerging markets area, all the new customers, all the, you know, when people talk about unbanked people, you know, I love that.
Yeah.
Coming into the Ethereum, to me, is, you know, it's cool because it's going to expose a lot of other people, a lot of central exchange types to this.
Yeah.
Which is a good thing. And then with the stuff the DeFi legislation you were mentioning earlier in the show, trying to think if there makes an opportunity for them as well. Vis-a-vis Uniswap.
I misspoke. Uniswap is 939 million. Pancake Swap is 206 million. So they're second in all DEX volume.
Oh, nice.
That's on one chain. right?
Yeah.
And look, I mean, you can't argue. Pancake Swap makes it easy and enticing. There's games, there's NFTs, there's lotteries. They make it the thing that consumers want. Uniswap is not the thing that consumers want. It's not fun. It's not, only if you're making money, it's fun, but that's it.
Well, you know, we'll do a quick swap real quick. You know, I'm always amazed at Quick Swap and their market cap.
Perps. Okay. Yeah. Oh, yeah.
I mean, it's like 13 million right now.
It's crazy.
So, you know, and that was, you know, that's a pretty dominant, it was at one point on Polygon, but it just goes to show you you're doing, when you're looking at DEXs right now, as far as if you want the token, you know, it's like, we talked about this yesterday when we're going in all these new layer ones, checking them out, you know, you got new DEXs in all of those.
Yeah.
So, you know, every new layer one project is coming with 2 or 3 DEXs, a perp exchange, the lending protocols, all of it. But is that really going to hold up against people like Pancake Swap that come in and do stuff like that across all the chains, you know, or the Uniswaps or the Sushi swaps? I just don't know.
So he Ignis, DeFi Ignis, who did this thread, makes your case on Cake, right? Higher revenue equals burn more cake equals the price goes up, more chains, more users, more revenue, right? So I didn't know this. They capped the supply at 750 million.
I didn't know that either.
Whether it was unlimited before. So I think your case for Cake gets even stronger here.
Yeah,
so,
I mean, it's just, we have to look at where the regulation's coming from and what models can actually navigate the regulation. In ways that make sense. And Cake doesn't have to do any business in the US. Okay. They're everywhere else. I'm sure they do, but you know, they don't have to still succeed. So
that's right.
When I look at things like that, I'm like, and I look at Sushi Swap and Uniswap and, you know, all the targets of FTX, basically, I'm kind of like, you know, Pancake Swap's looking pretty good. Definitely. In comparison to everybody else.
Well, that's a strong case to be made, man. And I think your case just got much stronger. So that's awesome.
I mean, there's so much good
in TVL on there already.
Yeah, there's so much good stuff happening. And that's why, you know, I know we talk about like the doom and gloom and stuff like that you hear everywhere. Yeah, I swear to God, you know, you hear it, but then you look at stuff going on and you're like what you know, there's real stuff happening.
Yeah.
And it's not doom and gloom. It's doom and gloom if you bought shit at the top and you're sitting there going, whoa, what did I do? But, you know, again, you shouldn't have swung the whole nugget in at one price. You should have eased your way in.
That's
you should have kept your money for DCAing because this shit's getting ready to turn. All of it, in my mind. And
look at that. Farming APY on Pancake Swap for ETH USDC is 9%.
Yeah, I mean, look, and you know, somebody asked, is DeFi secure? You know, of course, nothing is secure 100%, but I look at, say, Cake at 9%, and you know, I take that bet all day long because I know how CZ responds if stuff gets hacked, you know, or the chain reacts. You're not going to get totally screwed on this one.
That's a good point, man.
He always pluses it up. And brings you whole. So, you know, another thing to think about. But
hey,
you know, good stuff.
I know you've been taking a deeper dive into Zero VIX, and I think we're going to try to get them on the show. Anything else you've learned from it, or are you still kind of about the same where you were with it?
I've been over there, you know, looping. So, you know, I basically, you know, look, again, I was thinking about this morning. Everybody has to be crystal clear here that this is a pre-mine. So you know when it comes out that you're not probably going to get all the tokens then is my guess. Maybe you do, but that would, you know, considering
you'll probably get the tokens, but you can't count on what their value will be, but still.
Right. I mean, you'll get the tokens, but I think they might be kind of locked up for a while.
I see what you mean. Yeah, there's a lock period. Yeah.
And so if they don't execute during that lock period, you know, then, you know, you're not going to be happy at the end of that. But if they execute, then you're going to be like, you know, psyched because you didn't sell at the doubles or the triples because they wouldn't let you. And then maybe now you got your 10 bagger. But I think you just have to remember that going in. And, you know, my whole thesis on Zero VIX is that, again, Team India play, tied into the Polygon guys hard and tied into a lot of the other ones that we know and talk about a lot. So just being that tight with Polygon to me is a huge advantage. And again, 1.4 billion people that are function as despite 487 different languages, they function as a community and as a unified brand. They love Indian technology, as we all do. So to me, I think that fits well. And then you look at the yields. You can deposit BTC, well, wrap BTC, WETH, MAI, DICE, Matic, and get like around total, maybe 3-4% on the money, but then another 12% in VIX APR. So that would be the stuff that you know is going to be locked. It's the pre-mine. But then you can borrow. Like yesterday, I was borrowing MAI at 59%. Now it's 31%.
Nice.
So you basically borrow the MAI and then you loop it back in. Yes, it is. Eamon, it is 0 VIX.
No, he's asking what is it? It's a lending market.
I'm sorry.
It's 0 VIX. Yeah, lending platform.
Yeah. So, you basically just go in, make a deposit, borrow on it, deposit that, borrow on it, deposit that. You do your loop, but you're getting, 31.77 minus 4.5, so about 27% on the borrow to take the money.
Yeah.
Now you don't have to resupply it. Of course, you could go park it in another protocol if you want.
That's right.
At that point, if you find something that's better, or you don't believe in the pre-mine for some reason. But look, I'm seeing basically 42% interest there, I think, on the amount you put in, roughly. So that's what I've been doing. And there's been they changed the weighting on the rewards recently. I'm assuming it happened because I see the percentages different. It was equally balanced between supplying and borrowing, but they changed it to where I think the suppliers get like 1/3 of the reward and borrowers get 2/3.
Yeah.
So they're trying to incentivize the borrowing.
Right. Yeah, that's exactly right. 32% on WBTC for borrow, 12.67% supply for WBTC.
Yeah, so you can lever up to about, maybe almost double weighting by the loop, so that, you're getting, let's say you put in $100, you're kind of end up getting like 50% return on $200 after you loop it all up. So, that's helpful. So,
I mean, look at these USDC numbers, man.
Yeah.
5.31%, 21.58% on the borrow.
Yeah. So of course you're paying the 3.12 on that borrow, but you're getting the 21.5.
Right.
So
now
that's like 18.
You're not getting 21% of your USDC, right?
No, you're getting it in VIX.
21% in VIX. So everybody should be clear on that.
You're
getting paid in a token that may be locked up and may crash and dump and not be worth shit. So
yeah, that's always the problem.
If your money's sitting in your fucking wallet and doing nothing, then you consider a smart contract and exploit risk and decide whether you're interested or not. But it's compelling if you got money you don't care about losing, and you'd like to see how much you can make on it and see how the project goes. Yeah.
So with me, I am using money that I'm playing. So it's not a lot. But, I'm like, this could be something. And, you're in now and there's more opportunities downstream to probably get in at advantageous pricing. When everything fully goes live. I mean, there's a lot of ways to play it, and you get the returns. So
and this is Polygon, by the way.
Yes.
Yep.
So I'm always I remember Polygon at 3 cents, and these ones in Team India tend to perform. So
so your zero VIX tokens are used to vote on reward distribution. Across markets. That's
so
cool.
That was the one that just changed for deposit versus borrow, or supply versus borrow.
Yeah.
But yeah, look, there's 5 million plays out there right now.
Right.
And I don't even remember. DeFi Llama. That's how we found this one.
Yeah. This was one we stumbled upon. We got to do Raise tomorrow. I want to do another Raise run and find a couple we go check out.
Yeah. So, this is one to play with. It looks good to me. But if it crashes and burns, I'm not going to care, because it's not like it's a ton of money. But I'm not saying go drop $1 million into this. Okay.
No.
You make your own decisions, because I don't know these people. But the fact that they're on DeFi Llama, some level of due diligence probably happens there. The fact that they got pictures up of his advisors from Polygon and all these other players, I would think those guys would be raising holy hell by this point if they weren't part of it.
This is an advisor group, man. This is hardcore, and everybody's doxxed. And I think we'll just start calling you Joe Cawley. How's that?
Joe Cawley? Oh, Joe Cawley.
Joe
Yeah.
Cawley.
My nickname was always Joe College when I was younger.
That's good. Let's wrap it up.
All right, buddy.
1:10. We're late.
Oh,
Amen. Ronora, sorry. Niblets. Amen. I already said. Tilak, thanks for joining us new today. We love having you. And we didn't hear from Sean today. Shizzy's here. Hey, Shizzy, thanks to everybody for joining us. Thanks for participating. We love and appreciate all of you. Please, if you get a chance, rate and review us on Apple Podcasts or Spotify. It does a lot to help us grow. And if you're on YouTube, please subscribe and click the little bell so you get notified about the next episode, which is tomorrow at 12 noon. Thanks for listening and watching. Thanks for telling your friends and family about us. If you have any questions, thoughts, feedback, or have a topic you want to discuss about DeFi, don't forget to join our Reddit at r/MissionDeFi. Thanks, Joe. Have a great day.
Yeah, thanks, buddy. And Sean, let us know when you work out that BTC mining operation driven by Guinness Beer.
There we go.
We'll have you on the show to talk about it. But
Fueled by
thanks,
Guinness.
everyone.
Take care, buddy.
Always